The top business stories live from the Sky News City studio. The UK's largest untapped oil and gas field has been given the green light, containing more than 300 million barrels. Plans to boost trade between Florida and the United Kingdom. We'll hear from the Mayor of Jacksonville to find out what's in it for British businesses. And shares fall in London commercial property companies after claims the London office market is in a rental recession. Good morning, this is Business Live with Ian King. The UK government has this morning given the go-ahead for the development of Rosebank, the country's largest untapped oil and gas field. Rosebank is estimated to contain recoverable resources of more than 300 million barrels of oil, and if production gets underway by 2026, it will account for 8% of the UK's total oil production between then and 2030. The decision has attracted criticism from environmental campaigners who'd wanted the government to halt the project. But the North Sea Transition Authority said the grant of development and production consent had been awarded, taking net zero considerations into account. Well, joining me now is Alan Bruce. He's Chief Executive of Ithaca Energy, which owns a 20% stake in the field. Alan, very good morning to you. Give me an idea of the sort of investment that is now going to be required.
Yeah, good morning, Ian, and thanks for the opportunity to be on the programme. So, yeah, like you said, this is a significant investment for both ourselves and our partner Equinor, over around £4 billion worth of investment over the next 5 years or so, and generating over £8 billion of direct value out of the economy, and over 1,600 jobs through the process.
And are you and Equinor in a position to begin that investment straight away?
Yeah, absolutely. And we've been doing lots of engineering to get up until this point. And yeah, we're moving ahead straight away with the project. It's a redeployment of an existing floating production and offloading vessel that's going to be modified to suit the conditions in Rosebank. So that's underway already. Engineering is progressed, and we're starting with fabrication, a lot of which will happen in the UK, in Dunfermline, Newcastle, and the northeast of Scotland.
Give me an idea of the kind of obstacles that stand in your way here. I mean, this is pretty inhospitable conditions in which to be producing oil and gas.
Yeah, I mean, certainly west of Shetland is challenging from a met-ocean perspective, and a bit more challenging than some of the easier oil and gas production that's gone ahead. But as an industry, you know, it's nothing we haven't done before. You know, this is a real high-tech industry, and we've continued to evolve and develop technology. So, you know, some of the development of technology that's happened over the past several years is really what's been able to unlock fields such as Rosebank, and enable us to do it in a cost-efficient and environmentally sustainable manner.
And as things stand, you anticipate production getting underway in 2026?
Yep, that's the current schedule for the project. So 2026, 2027 first production, yep.
Obviously, this is quite contentious as regards the environmental campaigners who were opposed to the project. What would your message be to them? What would you say to them?
Yeah, well, look, the first thing I would say is that, you know, the oil and gas industry understands the transition that we're on to net zero and is fully behind that. So, you know, the people in the oil and gas industry, we have the skills, we have the people, we have the technological capability, and we have the supply chain to deliver the transition to net zero. So we're fully behind that. And investment in oil and gas doesn't slow down that transition. Actually, it helps support the transition, because while we're looking to scale up our investment in renewables and others, we need to make sure that the supply chain that we have and the people that we have still have good opportunities for employment in that intervening period. So, you know, the message would be that this is supportive. You know, we all understand the transition. We're all bought into it. You know, the options we have to us in the UK, we're a net importer of hydrocarbons in the UK. I don't think anyone believes that in any demand scenario, even the most aggressive scenarios for reducing demand for energy, we're still going to be a net importer. You know, so therefore, the best thing to do for the country's economy and the best thing to do from an environmental perspective is to develop those resources in a responsible and sustainable way locally, rather than importing them from the Middle East, Africa, or Russia.
I mean, campaigners would say that, hang on, you're going to produce something like 200 million tonnes of carbon dioxide.
Yeah, well, again, like I said, Ian, I mean, if you look at the math behind it, we we all understand the energy transition needs to happen, and of course we're all fully behind that. But the reality of the situation is it's just going to take us some time in order to transition, for example, the vehicle fleet to electric vehicles, to transition difficult to abate sectors like aviation. And even once we get to 2050, it's net zero. So, everyone understands that we're never going to be able to replace all oil and gas requirements. And, therefore, it is an extractive industry. So I think what people often don't appreciate is that the fields that are on production today in the North Sea, those are on natural decline. Many of them have been producing for 30, 40 years already, and they're going to come to the natural end of their life over the next 5, 10 years. They're going to be decommissioned. We'll do that in a responsible way. And the amount of replacement, is actually quite small. So we're nowhere near replacing 100% of the production that we currently export and consume. Projects like Rosebank will help us to replace some of that declining production. And as I say, do that in a manner that's much more environmentally efficient than importing hydrocarbons from overseas.
All right, Alan, got to leave it there. Appreciate you joining me today. Busy day for you. Thanks very much indeed.
Thanks for having me, Ian. Take care.
Now, the UK is already the biggest foreign direct investor in the US state of Florida, but both sides are hoping to deepen those ties. The UK is hoping to sign a memorandum of understanding with Florida, while a trade mission from the Sunshine State has just arrived here. It's led by the Mayor of Jacksonville, itself a hub for fintech and financial services. She's Donna Deegan, and she's with me now. Donna, welcome to British-affiliated companies employ more Floridians than any other country on earth. Why did it become such a magnet for the UK?
Well, we've been coming here from Jacksonville for 10 years. This is our 10th year in Jacksonville because we believe the real special relationship is between Jacksonville and London. So we've built some ties here, and we're very excited about the fintech connection. As you know, FIS is located in Jacksonville, the largest fintech company by revenue in the world. We have PaySafe that has just come over with thousands of employees. So we feel like we have a wonderful business environment, wonderful quality of life, low taxes, a great environment, and then the perfect business environment for our fintech partners. And in fact, we're hoping to grow health tech as well, in addition to fintech.
How close are we to signing this memorandum of understanding?
Well, it sounds to me like we're making quite a bit of progress. Every time I try to get nailed down the exact timing, of course, everybody says, well, we can't say exactly, and we can't tell you exactly what's in it, but we can say that we feel like it's moving ahead very quickly. So I think we're going to see it relatively soon. And
what benefits will that bestow?
Well, I don't know exactly because I haven't been able to get my arms around exactly what's in it. But I think at the end of the day, high level, it's just going to make for less friction when it comes to doing business between the two areas.
Yeah, as a Democrat, why do you think President Biden has dragged his feet on signing a free trade deal with the UK?
I certainly can't get inside of President Biden's head, but I will tell you that I know that he is obviously a fan of free trade. And so as far as Florida is concerned and individual states, I think we're moving toward a lot of those MOUs. And in Jacksonville, of course, we feel like we're already in a very business-friendly environment, trade-friendly environment for the UK and London.
I mean, you've talked a lot about services there. There's also quite a flow of goods between the UK and Florida, billions of dollars both ways.
Well, that's right. And, between our two areas, we have created tens of thousands of jobs, hundreds of millions of dollars, and especially in fintech. But we're looking to expand that. And I think that what people are seeing when they come to Florida, they're used to going to places like Miami and Orlando and Tampa. But what we have in Jacksonville is a quality of life that you're not going to find in other places in Florida. We have the beach, we have the river, we have extraordinarily low taxes there. As you know, we don't have a state income tax, but Jacksonville by far has the lowest property taxes in the state of Florida. So folks can come over, and if they're looking for a quality of life for their employees, they can have a large home, they can have wonderful schools. So we have a lot to offer.
I think there are something like 69,000 Britons living in Florida, is that right?
I don't know the exact number, but I know that every year we have more and more coming to Jacksonville, and I love that.
Are there enough flights between the UK and Florida? Would you like to see more capacity put on?
Well, I certainly would like to see that in Jacksonville. In fact, that's one of our main missions here this year, is we are working very hard to get a direct flight between Jacksonville and London. that's something that I think that we hope to announce relatively soon.
So where in continental Europe can one fly directly from Jacksonville right now?
You know, I don't believe that you can fly directly from Jacksonville to continental Europe right now. London would be, from Jacksonville, our first international flight, and I think that would, or at least to Europe. So I think that would be incredibly helpful to our efforts here.
All right, Donna, good to see you today. Thanks very much for joining me.
Thank you.
Some other business news stories for you now, and shares of leading commercial property companies have fallen this morning after a leading broker claimed the London office market is in what it called a rental recession. Jefferies told clients they estimated that London office usage had fallen by 20% due to the rise in hybrid working since the pandemic and the trend towards moving to greener buildings outside central London. It believes that 7% of office space in London's West End is currently vacant, rising to 10% here in the city. The iconic German footwear specialist Birkenstock has fired the starting gun on its planned stock market flotation. The company, which was founded in 1774 by the German shoemaker Johann Adam Birkenstock, filed a registration statement last night ahead of a planned IPO on the New York Stock Exchange. Well, the news comes 2 years after the founding Birkenstock family sold a controlling stake in the business to L. Catterton, the private equity firm backed by the French luxury goods giant LVMH. That deal valued Birkenstock at $4.85 billion US. The company is now seeking a valuation of $8 billion. And shares of Saga have risen by 1.5% this morning after the tour operator and insurance provider said full-year results would be better than expected. Saga was reporting a pre-tax loss of £77.8 million for the 6 months to the end of July. That was down from a loss of £261.8 million in the same period last year. That reflected impairments in its insurance division. But the company said it was keeping tight control of costs while its cruise bookings were on target for the year, with profits in the business expected to return to pre-pandemic levels this year. Well, we've been talking all week about the pound drifting against the US dollar on the foreign exchange market, and it's continued to do so again this morning. And that's also down to last week's decision from the Bank of England to keep interest rates on hold, as well as dollar strength just now. Earlier on, the pound hit its lowest level against the dollar since the 17th of March. As you can see, it's currently holding just above $1.21, off nearly 0.1% on the session. More or less unchanged right now against the euro as well. On the equity market, stocks in the Asia-Pacific finished largely to the upside after some respectable company results in China. As you can see, the Shanghai Composite up 0.6%. There's a public holiday looming in China, so again, trading a little bit thin there. Talking points today in Europe, meanwhile, you can see the European markets are all in negative territory again just now. But talking points today include H&M, the world's second biggest fashion retailer. Its shares currently ahead some 3% in Stockholm after its quarterly results beat expectations. Well, here in London, the FTSE 100 is also trading to the downside, a third of 1% lower just now. It's a mixed batch of movements today, in all honesty. The leading blue chip faller is Centrica, the parent company, of course, of British Gas. The share's off 4% right now. That's on comments from one of the brokers. I think it's Liberum that have done the damage there. To the upside, though, again, it's broker comment helping the specialist engineer IMI up by more than 3.5%. Outside the FTSE, Close Brothers, the merchant bank, has rallied by nearly 5% right now. It fell by as much as 7% at one point yesterday on its results, so that's come back today. Cybersecurity firm NCC, meanwhile, we've had the chief executive of that company on the show in the past. Its shares are up by 2% after it predicted a recovery in profits this year. Meanwhile, the motor dealer Pendragon, you recall we were talking about that company last week. Its shares are up by 10%. That's after it revealed a third bid approach for its business after the market closed last night. Meanwhile, the oil price is inching back towards the 10-month highs it hit last week as concerns about tightness in supply have resurfaced. A barrel of Brent crude will currently set you back $95.15 a barrel. That's up just over 1.25%. Well, joining me now is Victoria Scholar. She's Head of Investment at Interactive Investment. Victoria, good to see you this morning. Let's start with the oil price because, I mean, it had drifted towards the tail end of last week. We're back, as I say now, to these sort of 10-month highs.
Absolutely. We're seeing gains for both Brent and WTI. Brent is back above $95 a barrel. That's even despite a stronger US dollar. And this is really a supply story rather than a demand story. We've seen weakness in supplies driven by production cuts from Saudi Arabia and Russia that have been supporting the markets. Also, we know that hedge funds have been getting in on the long oil trade in anticipation that there could be further upside to come. And markets are actually pinning their hopes on a resilient US economy. We've seen quite a lot of supportive US data, and these factors are helping to offset some of the concerns about sluggish global growth as well as higher interest rates. And interestingly, JP Morgan even suggested that we could be heading towards some sort of a new energy super cycle with long-term fossil fuel investment dropping off as part of that green energy transition.
That's interesting. I should have mentioned earlier on, by the way, Ithaca Energy, who we were talking to earlier on, their shares up 7% right now. I mean, the other broad theme, Victoria, in the markets just now is this strength in the US dollar.
Yeah, absolutely. We've seen that the US dollar has rallied to around 10-month highs. This is all driven by this concept of higher for longer interest rates that's providing a major tailwind to the greenback at the expense of other currencies like the euro and the pound, which are down at 6-month lows. Actually, sterling's on track for its worst week or worst month, actually, since the mini budget. And that really reflects increased recession risk in the UK. But it's certainly a shaky week for US markets. We saw a big sell-off on Wall Street yesterday, and that risk-off sentiment has been driving investors towards the US dollar as well.
Well, let's talk about some of the individual stories around this morning. H&M, obviously the big mover in European markets today. I mean, they have disappointed of late. It's quite a surprise to see them outperforming to the upside.
Yeah, absolutely. We had that report from H&M just a few weeks ago saying that sales were flattish and that hurt the shares. But actually, we're seeing that the stock is trading higher today. It reported third quarter operating earnings that were largely in line with expectations, but they were higher from last year. I think some of the upside is driven by the fact that it's announced plans to buy back some of its shares. And it's also returning to JD.com, which is a leading e-commerce platform in China. So that appears to be offsetting the fact that it warned that sales would actually be down by 10% this month. Investors appear to be shrugging that bit of news off. So it looks like H&M is really trying to return cash to shareholders. It's meeting its profit expectations, and it's also shifting towards growth markets like Latin America and China, all of that providing some optimism towards the company.
Yeah, now another feature, of course, this morning is Saga, which I mentioned a moment ago. I mean, this one's been a perennial disappointment ever since it floated on the stock market.
It really has. You know, this is a stock that's down over 90% over the last 5 years, but it has said today that it expects to deliver significant double-digit growth in revenue and underlying profit that's ahead of market estimates. It also reported a 15% increase in revenue for the first half, and that was because of growth in cruise and travel businesses. But its insurance business is the bit that's really been struggling. It's been dealing with the backdrop of inflation. It described it as a difficult inflationary market. But certainly, this is a stock that's really struggled to recover since the pandemic, when lockdowns and travel restrictions really hurt the business. And actually, I've been talking about this more widely this week, that a lot of the travel-related stocks have been caught up in these macroeconomic headwinds and have really struggled to get back to those pre-COVID highs, even though some of their performances have been really good, like we've heard from EasyJet and Ryanair and TUI. They've all enjoyed really strong summers, but that hasn't been reflected in terms of their share prices because they're highly correlated to the macro environment.
All right, Victoria, we have to leave it there. Good to see you this morning. Thank you.
Thank you.
Still to come here on Business Live. We're going to be looking at one of the UK's big growth sectors, the wine industry. I'll be hearing from Andrew Carter. He's Chief Executive of Chapeldown. Don't go away.
Derma itself has initially had about 30,000 displaced people. So what we mean is people who have actually literally lost their homes and are now staying in temporary shelters. That's gone down to about 20,000, but they've moved out to other areas because Derna is pretty inhospitable at the moment. The infrastructure is very bad there. We were actually told by the Minister of Health when I was there in Derna that they need psychosocial support. The trauma that has been faced, not just by the affected populations, but by the hospital staff. So key doctors and nurses lost their lives. Thankfully, Libyan expertise, medical expertise has come in from all over the country, but they're lacking in basic supplies, including fresh water as well. Severe storm, and that affected the northeastern coast of Libya. I was actually flying in on that day, and the airports were closed. It affected the east the most. Benghazi is the second biggest city in Libya. However, in Derna, there were 2 dams that collapsed, and that led to the catastrophic loss of life and displacement of people. You have an internationally recognized government in the west, in Tripoli, the Government of National Unity, and you have another opposing government in the east, Government of National Stability. This moment of tragedy seems to have brought both governments together. So the Government of National Unity has actually established a National Emergency Committee, and the government in the east has put aside funding to really work on providing the resources that are needed. So I think there's a rare moment of coalescence here where the tragedy has brought people together, the people of Libya together.
The 5 of us have made it out of the car.
Welcome to Backstage, the film and TV podcast.
It's like Emirates. It's like better. Fly Emirates. Fly better. Thank you.
Welcome back. Now, Chapel Down, the UK's largest winemaker, said this morning that it was on course to double in size between 2021 and 2026. The company this morning reported a pre-tax profit of £618,000 for the 6 months to the end of June. That was up 26% on the same period last year. That came on the back of an 18% rise in sales to £9.3 million. Well, joining me now is Andrew Carter, Chief Executive of Chapel Down. Andrew, good to see you this morning. I mean, it looks like this was due to both higher volumes and you managed to get some price increases through as well.
Yes, good morning, Ian. It's great to see you again. Yes, Chapel Down, as England's largest and leading winemaker, continues to grow from strength to strength. And in the first half, we've seen both volume growth and value growth as we attract more consumers into the brand. As you're aware, we have high-profile sponsorships with English cricket, a new 3-year deal with Ascot, and we've had a successful summer of events. And off the back of all of this, we're seeing record levels of brand awareness and penetration growth for our Chapel Down brand.
Your sales grew most strongly in the off-trade. Was that something that you've been specifically targeting?
Yeah, off-trade is an exciting place for the brand. We have 56% of our volume through the off-trade, and we work very closely with partners like Waitrose, Tesco, Sainsbury's, M&S, Majestic. We have, alongside our English sparkling brut wine, have also got increased distribution now for our pink rosé sparkling, and we've seen significant sales uplift as well around that particular product.
How do sales break down these days, Andrew, between still and sparkling?
Yeah, the best part of 80% of our business, Ian, is sparkling. We're very focused on being England's #1 and most celebrated sparkling winemaker. And sparkling wine clearly is what is driving the premiumisation of our portfolio and our sales value growth.
And although it's fair to say you are constantly bringing out new varieties, I mean, you've got to push on for Chardonnay, I think, right now.
Yes, look, still wine is important to us, and we have a great selection of still wines that cover price points from the £15 through to our luxury still wines. And our Chapel Down Kitts Coty Chardonnay, which is currently the focus of our marketing push, as you say, is up there with any Grand Cru Chablis. So, yeah, I would highly recommend that. We tend to sell most of that through our direct-to-consumer channel. At chapeldown.com, where we have a database of over 10,000 consumers, and within that, 8,500 shareholders.
And how about the export market? How's that been for you these last 6 months?
Yeah, as a business, we're focused domestically. It's 95% of our company, but the first half last year, 5% of our business now reflects the growth of international. It's a large opportunity. We're in 14 international markets. And what we've also seen in the first half is distribution going into the likes of London Heathrow and London Gatwick, where we've seen tremendous rates of sale as we sell our brand both to UK departing holiday passengers, but also international visitors who want to take home England's best and finest sparkling wine.
And without wishing to tempt fate too much, you say in the trading statement today that this has been an excellent harvest this year. It looks that way.
Yes, we're 1 week into picking, and therefore we expect to complete our harvest by the end of October. And we've seen really excellent growing conditions this year. The sunshine and the warmth in April and May. Actually, the rain in July and August was good for the vine, and then we've seen the late sunshine. So a perfect set of conditions that's resulting in forecast for record-breaking harvests, both in terms of volume and in terms of yield, in terms of grapes per acre, but also with exceptional quality. So it's a very exciting time as we look to the harvest and what that will do to underpin future sales volumes in 24 to 26.
That's a very upbeat note on which to end. Andrew, always good to talk to you. Thanks very much for joining me today.
Yeah, great to see you again, Ian. Thank you.
Well, that's it for me for the time being. I'll be back at 4:30 this afternoon with our afternoon edition of Business Live. Hope to see you then. In the meantime, do stay tuned. Coming up after this short break, it's Jane Secker. Thanks for joining me this morning. Cheerio.